So February also market was very bad. Totally in January and February, most of their portfolios were down by around 25% in the 2 months itself. I am tracking many of the PMS, frontline PMS in our country, and their portfolios were down anywhere between 20 to 25% in January and February alone. So our PMS also down by around 14% in January and February. And if you see the main reason why it is falling, it is mainly because of continuous FII selling. So if you take from October onwards, almost on every trading day they have sold, barring few trading days, 4 or 5 trading days, almost they sold on almost all trading days. So daily 5,000, 4,000 like that they were selling. Just in the last 3-4 days, their selling has come down, 2,000, 3,000 crores they have sold. On February 28, they sold almost 12,000 crores worth of shares. On that day, I was on leave and I was just watching. Most of the mid-cap stocks were simply falling by 8%, 10% like that. And index was, Sensex was down by 1,400 points on that day. So the only way market to recover is that FII selling has to stop. So why the FIs are selling? The main question comes. Basically 3-4 reasons are there. The first one is they feel that Indian markets are overvalued relative to other markets. That is one reason why FIs were selling. The second thing is that our currency was weakening. So whenever currency is weakening means generally FIs don't prefer to buyers. The new buyers of foreign institutions, they tend to stay away from the market. They will wait for buying, because in a weakening currency scenario, FII money tend to come down slowly only. They won't come immediately. They want first currency to get stabilized, then only the buyers will enter. So that also one reason why new FII money were on sidelines. The third reason is that our earnings slowdown was there. So in the current financial year FY25, it is expected that our earnings will grow. Nifty earnings I am basically talking about will grow around 5%. Initially it was expected it will grow between 10 to 15%. That did not materialize. So only just 5% growth was there. So basically 3 major reasons were there. One is the high valuation. Then the second one is earnings slowdown. Third one is the currency weakness. Now if you see that all the 3 are getting now negated now. The valuations has now corrected post the correction of Nifty by 16%. Now the Nifty is near to its long-term average valuation. The second thing is that now dollar index started falling, so which means that the most of the rupee depreciation is almost over. Rupee is unlikely to fall much from here. It fell from 83 to 88 range. Now from 87, 88 range, it is unlikely to make big depreciation from here on. So the FIIs who are waiting on the sidelines, they may come in, because most of the currency depreciation is over. The earnings deceleration of current year, next year, I personally feel that the earnings will grow to double digit. Main reason is that in the current budget, the government has given 1 lakh crore IT exemption to the large mass of Indian middle class, which will boost consumption. Mainly our economy mainly consists of consumption based economy. That slide I will show it. Investment, consumption are 2 main parts of the economy, government spending. In that, consumption plays a major part. So when once the 1 lakh crore boost comes to economy means it will revive it. The other positive news which I saw in the morning was that the European Weather Agency, they are saying that the FY 2025 monsoon is going to be a good one. The yearly predictions they have made it. If monsoon also good means it would be good for the earnings also, because of the revival in rural economy. So overall, the most of the bad news are already in the price. And in the globally, if you see that the tariff war has started, US has imposed a tariff on Mexico and Canada, and they have postponed till April 2nd, and they have imposed China 2 times. They have imposed it 10 plus 10, totally 20% they have imposed on China, and retaliation tariff also happening. So till the reciprocal tariff comes into effect, a lot of talk will be there on tariff. And the positive news is that the crude oil prices started dipping. Now it has come to $70. That is one big positive. US President many times has told that he wants oil prices to come down. So maybe the big rally for crude oil prices is very unlikely and may fall around technically 68, 69 is a very strong support for Brent crude oil. If that falls means another 15-20% fall from there is possible. But US President wants crude oil prices to fall sharply. That is one of the commitment he made during his election campaign. So he favors lower crude oil prices, and if that happens means it will be positive for our country. And the big thing which is happening globally is the global realignment on geopolitics is happening now. Previously Europe and US was very close. Now it looks that Europe is moving away from US. The things, the statements made by France and other countries, it looks like that US, European countries, they are moving away from US, and they want their own economy to do well. That's what they expected. After many years, Germany has decided, new government is there, and Germany has decided to spend big money on their infrastructure and defense expenditure. It's a very big news because I haven't seen any big spending by European economy, because there the population is shrinking. Generally the infrastructure, most of the infrastructures are there. So there is no point in spending in infrastructure. That is what the case for the last many years. But German came and told that they are going to spend big money on infrastructure and defense. It's a big news actually globally. And index wise, if you see, Nifty and Sensex were down by around 4%, whereas mid and small cap down by 9%. And this is the drawdown in the current correction. So Nifty has corrected around 16% from the peak, and if you see the mid caps, around 20-21% correction has happened in various mid cap index, and small cap it is around 25-26%. So it's a decent correction in this category. Mid and small cap category is a decent correction, and micro cap index it is 27% correction. That's why most of the portfolios, generally the retail portfolios which is aligned towards this mid and small caps and micro caps, they are down by 25-30%. In January, February alone 25% fell. Apart from that, the previous October, November, December corrections were there. That is why most of the portfolios were down 30%. It has fell. And the valuation, if you see, Nifty has come to the long-term average, and mid cap and small cap, there is no point in seeing the absolute PE ratio. So I will give you one example, because Vodafone Idea, one company is there in the index of almost all index of this mid cap index, it is there. And if you see that the Vodafone Idea consistently shows losses of around 30,000 crores. Every year it shows losses. So that means 30,000 crores of loss means it has to be compensated by another company, another many companies of 30,000 crores profit. So because of that, optically the PE ratio looks very high for mid cap index. Always it is like that. So we have to be stock specific, mainly in the mid cap and small cap index. And this is the Nifty losing streak since 1999, where the continuous fall of 8 or more days. So this time many records has been broken of a continuous fall of 8 or more days. This time market fell. And if you see that between 5th February and 14th February, market fell consecutively, it fell by 8 days, 3.4% down. And 18 to March 4th, another 10 days of continuous fall, it fell by 3.8. Just only one day market was positive. 15-16 was a Saturday, Sunday, and 17 was Monday. So on Monday, on a single day, market was slightly positive. Otherwise, what would have happened is from February 5th to March 4th, almost 1 month, market would have continuously traded negatively on a daily closing basis. Which, if you add both this, almost 7.2% market would have fell, and the number of days also would have increased. So the fall, continuous fall, we are seeing after many years. It has happened in the month of February, and till the month of March it has happened. Previously it has happened during 2000, during the dot-com bubble. It has happened, market fell very sharply. Then in 2001 it has fell. Other than that, if you see that, now only recently after many years we are falling consistently. and on a daily basis for almost 1 month. So the current correction, what we can say, is basically a valuation reset, because many companies were trading at a very high valuations. If foreign institutions, they were uncomfortable with the high valuations being paid for many companies, and that is the main reason why the market has corrected. Now in some cases valuation has become reasonable, and now if next year if earnings growth comes means, then the stock price will look very attractive. That is the high valuation, many pockets of market coupled with slowdown in led to the correction. That is the main reason why FIs were selling. And what we feel is that many stocks went up based on stories. 3 years back in 2021, everyone told that most of the vehicles by 2025 running in India will be electric vehicle. Like that, many stories were told, and many stocks which were unrelated to electric vehicles, and that also went up. These type of companies will definitely fell very sharply and unlikely to recover. That is what my expectation is. And similarly, solar based companies, the renewable energy based companies, they all went up based on stories, and they have corrected a lot. And last was the data center story, where many companies were told that we are going to keep the data center. Like that, they told it, and went up based on entirely based on stories. Those who are in the market for the last 20 to 30 years, they very well know that it's not, these and all, it's not going to happen immediately. Even if it happens, it will happen slowly. But stock prices went up very dramatically, that it is going to happen overnight, like that, because in social media, if you write in a very good English means, then everyone will believe that story. Like that, the stocks were pumped up, and they have fell, and we feel that most of the stock unlikely to go up. And mutual fund inflows remain steady, and most of the domestic investors, they haven't rattled in the market. They are still folding, and many are still on an investment mode. They did not become panic, and that will give support if once valuation become very supportive. And the main thing which is now has the foreign institutional selling will taper if government induce confidence to them. So that confidence we have to give. That is the responsibility of our government, finance ministry, and all bodies. Because if you give some confidence to foreign institutions means, definitely out of 10, the 2 or 3 may stop selling. That is very crucial. And if you see that in both in RBI and SEBI, the top person came from the finance ministry. RBI governor previously worked in finance ministry. Similarly, SEBI chairman, he also came from the finance ministry. We hope that some positive comments may start coming from them. Already if you see RBI, they are taking lot of positive steps, which as of now market is ignoring, but it will have very good impact in coming days on economy. So this one very good quote, which I generally likes it for last many years now. I used to read this quote very often, and it has been said by Benjamin Graham. He is said to be the father of value investing, and Warren Buffett, many of them will be knowing it. And Warren Buffett mentor is Benjamin Graham. So in 1955, he was asked to testify before the Committee of Currency and Markets, where he told one statement. They asked one question to him, Benjamin Graham. He is basically a value investor. He buys a stock at $10, which is worth $30. So they asked a question to him. So you felt that it is worth $30, you are buying at $10, but how others will know that it is worth $30? Because others has to feel the value, then only they will come and buy, and the stock price will go up. Like that, they asked one question to him. So his answer was, this is his answer. That is one of the mysteries of our business, and it is a mystery to me as well as to everybody else. We know from experience that eventually the market catches up with the value. It realizes it in one way or another. What he says that he himself don't know, but as a market, they will come to know at some point of time that the stock is worth really high. So it happens on both ways. Undervalued stock eventually catches up with its real value by going up. Similarly, a overvalued stock, no, it will eventually will fall to its true value. So even after many centuries, this statement will remain valid. So many times I used to read it because I also feel many times I also feel why this stock is trading at very low value. For example, Garden Rich Simple Does we initially recommended at 120 rupees. I felt that the company is having 25,000 crore order book, is trading at a very fraction of its value. 3 or 4 years down the line, if they start executing the order, the dividend yield itself will become 10 to 15%. Why people are selling this? I felt it, but somehow the stock went up. The market realized its value; it went up. So like that, many stocks were there. Recently, we recommended this Avanti feed few months back. So at that time also, I felt it is a zero debt company. It has having huge cash. The shrimp business is on verge of turnaround, and raw material prices are falling. I felt, and this is, as the same market was coming down, but the stock was going up, and I don't know who were buying this stock price as it was going up. The volume used to be 1 lakh, 2 lakh. Now it is daily trading around 8 lakh, 10 lakh shares. It is daily trading. So it's remained a mystery of our business. We don't know how the market recognize it, and many are buying it. And this is the long term average, and if you see that Nifty PE is almost at the average level, it has come down, it went up, now it has corrected to its long term average. Generally stock prices never trade at an average, long term average, either it will be lower or higher, but I feel that the most of the correction is over. Similarly, if you see the Nifty price to book, it is at its long term average. So one of the big concerns of FIs of very high valuation, that has now negated now. Market cap to GDP, still it is higher, it went to 150%, now it is at 116 now. And MSCI India premium over MSCI emerging market, which is where the FIs most closely watch, that also has now reached its long term average, and now it has reached it was a huge premium previously, now it has come to its long term average. So overall, the valuation wise, the high valuation that has been now negated now because of the fall in stock prices. The another thing which is very confusing for many people was that generally when market falls sharply, the India VIX, which is the volatility index, some of them used to call as a fear index, it did not went up. Generally when market used to fall, the VIX used to go up by 15, 20, like that it used to go up. When VIX peaks out, then only market used to bottom out. But this time if you see that the VIX has since spiked out. So it's a big mystery to many of them, even to big option traders, because generally during market fall they used to make good money because option premium will be higher and they used to make good money by selling it. But this time even the options traders who could not able to make money because the premiums were very low, and the spike which was expected during the market fall, that did not happen. So one reason could be that the domestic this VIX generally used to go up very sharply when there is a panic in the market. As one section of the market now it is entirely driven by the domestic money, it never became panic during the fall, and that could be one of the reason why the VIX never spiked up. And this is important because half of the investors came post COVID only. During COVID, just 2.1 crore unique investors were there, PAN card unique investors were there. Now it has almost doubled in the last 4 years to 4.5. So half of the investors who entered in this period, they haven't seen the correction, and they will see the correction now. But generally it's always good to see some correction during the initial period of investing. That will give you a very good experience to most of them, because market always corrects. We should not get carried away based on stories and all. And now we have to see how their behavior is. Till now the SIP inflows has been stopped, and even when some stops are there, new clients are getting added. So net basis there is not big stoppage of SIP accounts, and we have to see how it pans out. By February data will be released next week, and that will be known how the investor behavior is. And this is the foreign institutional inflows, and this is the continuous 5 month of selling of 3.25 lakh crore in the secondary market. If you add the primary market, it will be much less, but in the secondary market sell-off, it is almost 3.25 lakhs they have sold it, and even in the March first week, till now we haven't seen any buy figure, and we'll wait and see at least selling tapers. Since the dollar index started cooling, I feel that most of the some selling may get reduced by foreign institutions in coming days. And this is what our MD told. In 1995, the Nifty was started at 1000 index level. It went almost to 23,000 now. That is 23x. It has gone up since inspection. Whereas if you compare in US dollar, it has gone up by 9x only. Because when the starting was there, Indian rupee to dollar was around 35 range. It was there, and now it is almost 88. So if you discount the rupee depreciation, what has happened is that foreign institutions got just 9x, whereas the domestic investors, they have got 23x. So rupee depreciation always trims foreign institutional return because of the rupee depreciation, and I feel that most of the rupee depreciation, the current phase is over, and from here on rupee may consolidate around 1 rupee range. That's what my expectation is. And globally, the tariff war has started. US has levied 25% tariff on Canada and Mexico, and suddenly he has passed it day before yesterday till April 2nd. So we don't know how Trump will behave. Daily he is making some statement. Next day he is reversing it. We don't know how that will pan out. On China, 20% he has imposed, but this has been reversed. First initially he put in 10%, then another 10% tariff he has levied, and in retaliation China also has levied some taxes on the US agri products, and China boldly told that we are ready for any war, be it an tariff war or trade war, any type of war we are ready to face. Like that they have made the statement, and reciprocal tariff from April onwards, that we have to see how it pans out. So the impact of the tariff war is definitely it will slow down global economy, because the capex postponement will happen. Corporates, they always need some certainty. If somebody wants to put, for example, take a pharma company, if they want to put a big project in India, means they may wait for another 4 or 5 months, because Trump wants that Indian companies has to come and put plant in US. That's what he says. So pharma companies which is going to export to US, he may wait whether to put a plant in India or a plant in US. So that may lead to some postponement of capex. That may lead. They will wait for at least a few months. That will lead to slowdown in capex spending. The second thing is that if tariff wars are put, then US inflation will go up, and the global trade war will start. US will put tariff, and retaliation other countries will put a tariff, and global trade war will start, and the trade war may gradually lead to geopolitical tension and geopolitical alignments. These are extreme steps. So we will have to wait and see how things will pan out in the next 2 to 3 months. That will give some clarity. And realignment of geopolitical politics, as I previously told, now Germany has made an U-turn on fiscal policy. Previously they were having some limit on fiscal spending. Now the new party in the Germany, they are told that they are going to exceed that, and they are going to spend heavily on infrastructure and defense, well above the fiscal limit they have set. $500 billion for next 10 years they have told in. Most probably the other countries may also follow German policy of spending heavily on particularly defense, which they were importing from US, that they may start manufacturing in their own country. The next thing is the US is turning to be an unreliable partner, because if he keeps on threatening, means no one likes, and they may try to move away from them, and they realign the trade policies and geopolitics. Many countries may start doing it if whatever Trump tells becomes a reality. What we should do now is that reasonable valuation. See, generally when I buy shares, no, I will look for valuations only. I generally don't look at the index level like that. I look for the companies which I am buying, whether it is available at a reasonable valuation, and if it is a reasonable valuation, means I buy it. Sometimes it will fall from there, it will become much more cheaper, that we cannot avoid it. and main thing is that when market falls, it will throw opportunities to for long-term investor to uh, build a portfolio, and stocks that run up on stories, that may unlikely to go up. Initially, in the initial rally, it will go up. When market fall very sharply, then on a first leg, all the stocks will go up, and but from after that, many stocks will not continue the rally. So the stocks which ran up on stories, they are unlikely to see previous high. At that time only this portfolio churning may be necessary. Some of the weak stocks which we may be having, that has to be sold, and other stocks has to be bought. And my feeling is that immediately in the next 1 or 2 months, market may consolidate. After the first leg of pullback rally, market may consolidate and will stay in that range, and post that only, once the earnings growth confirmation comes, then we may see big upside. Till then, market may be on a wait and watch mode. RBI, I told that new RBI governor has came. He has done a lot of positive things to the economy. The first thing is that he has cut by repo rate. Though RBI, the Monetary Policy Committee takes the decision, the credit always goes to the RBI governor, and the repo rate they have cut by 25 basis point. The next big thing which has happened in the last 1.5 months is that RBI has injected huge liquidity through open market operations and forex swaps. Open market operation is nothing but RBI itself buy the government bond from the banks, so that the liquidity will get into the system, and forex swap also, it will provide liquidity in the economy. Generally March is said to be a liquidity tight market, because most of the corporates and public will pay advance tax to the government, and it will take some time for the government to spend that money. So till then money will be lying with the government ideally. So March generally will have high liquidity tightness month, and to avoid that, RBI has done these things. The second thing is that there are almost 40-50 billion worth of forex reserves we have got reduced now, because of the FIA, mostly because of the FIA selling. So whenever the FIA is selling and take money from away from India, means generally at that time also big liquidity tightness will happen, because money is going out of India. For that also RBI has injected liquidity, and it's a very big money they have injected it. And I feel that the way the RBI is behaving and the actions they are taking, it will be very supportive for the economy. And they have reduced risk weight for the NBFCs and microfinance institution by 25 basis point. It is also positive for the NBFCs and microfinance companies, it is positive. So the way the new RBI is taking steps very quickly, it shows that they are supportive for growth. And we expect that the next 1 year the consumption theme will do well. The first is the revision in income tax slab rates and slab, almost 1 lakh crore boost it has been given to the economy. That is one. The recent RBI action, all these are very positive for the consumption stocks. That is why we have given some 2 stocks, Wingis India and Wonderla. We have given Crompton Consumer based on the summer weather. We have given that. Garden Reach, we are expecting one big order this time. In the next 1 or 2 months we will get it. L1 government will announce it within 1 month. We are expecting in March or April, where a 35,000 crore order. Four players have bidded into that project. 35,000 crore order. 22,000 crore and 13,000 crore. L1 will get 22,000. L2 will get 13,000. So we feel that Garden Reach, either they will get 22,000 crore order or 13,000 crore order, they will get it. We are expecting in March or April, we are expecting. So based on that only, Garden Reach we have recommended. See, consumption, if you see that, very important for our economy. Indian GDP, if you see that, private consumption constitute almost 56%. It is for private consumption. Government consumption is 9%. Gross fixed capital, which is the investment, is around 33%. So if you see private consumption and government consumption, it comes to around 65% it comes. So the IT rebate, the IT consumption they have given in this budget, it will be helpful for 56% of our GDP. Investment, if you see, our investment is much lesser. Just 34% of our GDP consists of gross fixed capital formation is nothing but the investment of the investment segment of the GDP, 34%. Whereas if you see in China, it is almost 40, more than 40%. It is less than China in our country, mainly because our savings rate are less. Initially, previously I used to feel that our savings rate are very high among global countries. Even though it is high, but still much less than China. If you see China's gross savings rate, it is almost 44%, whereas in our country it is 29% only. It is coming down when compared to previous decade. It has fell, whereas in China it is 44, almost 50% higher than what we save. China is saving, because for investments for infrastructure you need long term savings money, because interest rate has to be very less for them. These projects won't give much profitability, so you need money with a low interest rate. Only long term savings money can give that rate. See, LIC is we are paying premium to LIC. What LIC is doing, they are lend to these infrastructure projects, they lend to government, they lend at a lower interest rate, because these are long term savings money. So China, why spend so much money on infrastructure? Because they have long term savings money. They have 44% gross savings rate is there, whereas in India it is just 29%. Whereas our strength is in service exports. If you see that we have done phenomenally well in services, 1.9% of India's share of global service and goods exports, 1.9% in 2005. It is more than double to 4.6%. Global share is 4.6, whereas in goods 1% it has become just 1.8, not even doubled. Whereas service, it is more than doubled. So our strength lies in service, and we have to focus more on service rather than in manufacturing. That doesn't mean we should not do manufacturing, but our strength mostly lies on our services, if you see the long term growth rate. So household savings, mainly the financial savings is falling. That is the reason why we will mail this presentation to you. We can see it. Financial savings is coming down. Now when new IT regime, you are not forced to save. Previously, if you see the 20-30 years back, middle class people, they put a lot of money in banks as a deposit. Now the young generation, they are not putting any money in deposits in banks. Now the new regime, previously many of them used to take LIC policies only to avail this IT rebate. Now new regime, you are not forced to do it, because savings, they are not encouraging it. It's how they are left to the individuals to decide whether to save or not. So I feel that the financial savings may take some time. Maybe they may invest in stock market, whereas in products like fixed deposits, in insurance and all, no, it will be very selective. Mutual fund inflows, still study. The February will be very crucial. That may mostly it will be released on Monday or Tuesday. That we have to see it. In SIP, there is some marginal deceleration, having fell below 26,000. Some small slowdown is there, and my next week figure will give clarity. But still, I feel that the domestic liquidity will continue to be available. They will get panic only if there is a huge scam like Harshad Mehta scam or like that. If something comes like that, I feel that they will get panic only at that time. Till that doesn't happen, I feel that the domestic liquidity will continue to flow. And events to watch, the foreign institution, I feel that the selling may get tapered. Similarly, the reciprocal tariff will be imposed on April 2nd. That we have to watch. Okay, thank you. That's it.